Good afternoon, everyone, and welcome back to our monthly webinar on currency outlook. Today being a very special day, in spite of Monday, we are doing it on a Thursday due to unforeseen events. But I think probably it's the best time because in the morning we had the monetary policy, and I think what the commentary which came out was very strong. I think India is on the forefront and tackling all the issues globally which are being faced, and keeping the policy stable at a constant rate, and covering all the grounds, be it growth, be it inflation, or be it the geopolitical tension. So I think we are on a great footing, and I think it's a great day today. We have with us Mr. Dilip Parmar. He is our research analyst and he gives fabulous research. Uh, his presentation is one which we look forward to in every month because there are a lot of insights across the globe what is happening, and I think the currency sets the tone for rest of the other asset class also. So over to you, Dilip bhai. I think it's a very interesting, would be an interesting presentation today, knowing what is on the India front also. Yeah, so over to you,
Yeah,
Dilip bhai.
yeah. Thank you, Samir bhai. So basically, the June as a month has been quite a busy month, just because what we see that historically as well as from the policy front, all the major central banks have come up with the policy decision, and normally what we see that the June could be the slightly on a volatile side. But as since last couple of months, the way the RBI has been intervening and managed to curb the volatility, rupee remains more or less on a sideways side. And since last couple of months, what we have seen that the rupee is resilience towards the other currency, and rupee is being an median performer among the Asian currencies side is concerned. But this month, before going into the June prospects and what could be the range. We will start with the you can say that the what will be the price actions in the May month. Uh, so as you see that the dollar index has moved up somewhere around 2.62%. Basically, the fall was in a fall in a euro was the main culprit for the dollar index to gain. Euro has fallen just because there is still the chances of that the ECB may go for the another 50 basis point hike in this month meeting. Apart from that, pound also fell in the May month. Uh, Same way, just like the ECB, Bank of England is also of a view that they may also go for the another 50 basis point hike. So that was the reasons behind that the both the currencies remain on a downside, or you can say that the on a weaker side. What we have seen that the Japanese policy decisions remains on a neutral side, and the few months back, which we are talking about the yield curve management and all these things has been nullified after that new governor has to take over. But the Japanese currency also depreciated somewhere around 2%. So all in all, the dollar index has strengthened after reaching the psychological level of 100, and what we have seen that the again it has come to the level of 104. So the impact has been seen on the rupee as well. What we have seen that the rupee also declined by a percent, 1 percentage point. Major OGT side, if we go for the Australian dollar and South Korean won, these are the two currencies has strengthened. This week, what we have seen that the Australian bank has also raised the interest rate. Yesterday, the Central Bank of Canada also raised the interest rate. So these are the two central banks which started raising the interest rate, and that was already pricing by the forex market, and that's the reason what we have seen that these two currencies has been on a positive sides for the against the dollar. So all in all, the impact of the uh, uh, weaker Chinese yuan and other Asian currencies has been witnessed in the rupee side as well. Looking at the commodity front, in the last month WTI has fallen more than 11%, silver 6%, and gold somewhere around 1.37%. So all in all, the crude has fallen almost 40% on a year-on-year basis. So that has supported rupee to be on a less depreciation side. As we can see that the Chinese currency depreciated somewhere around 3%, while our currencies has fallen just a percent. So that was the crude for lower crude oil and gold prices has supported our currency. On the risk asset side, we have seen that somewhere around 5 billion kind of inflows in the May month, and that has been supported the domestic equity. So foreign fund inflows has supported domestic equities. While on a global front, what we have seen that the Nikkei and the Nasdaq, these are the two indices has outperformed in the May month. Uh, Nasdaq has outperformed just because few of the major stocks has outperformed due to the better results. So on a all in all basis, risk sentiments remained on a mixed side, and particularly on a European side, what we have seen that the indices has underperformed after April's outperformance. Uh, Today's webinar is more on a RBI's policy decision side. So why the RBI took the pose in today's meeting? First of all, what we can see that the growth momentum has been on a flattish side, or you can say on a stronger side, while the key rates has been maintained as the growth is on a flat side, while the same time the inflations has been coming down. So that has given RBI the comfort to go for the pause in today's meeting, as the growth is on a steady side and the inflation has declined. That was the reason what we have seen that the RBI has again took a pause in the second meeting as well. So going ahead, what could be the chances of the interest rate? As per the Bloomberg estimates, the again next month or a next meeting, we can see that that is on August month, the RBI will again go for the pause. We believe that the RBI might go for the rate cut only after the December. So the again next meeting also the policy rate will remain on a slightly on a same side, but the way the today's meeting has been pan out, the rate cut would be difficult this year. RBI may go for the another pause in the next meeting. uh, what could be the reasons? As we can see that the RBI has again lowered the inflations from 5.2% in the previous meeting to 5.1% because of the uncertainty over the monsoon and the global commodity prices. So they took a stance of withdrawing the accommodations this meeting as well, while the market was pricing in slightly on the dovish side, but the RBI has continued with the stance and policy both on the same front. Here is the inflation side chart. As RBI has also said in today's meeting that the retail inflation, food inflations, and core inflation, all three inflations has started cooling down in the March and April month. Going ahead, further fall in the crude oil or can support the inflations, and we can see that the ease in the inflations on a next month data as well. So inflations could be we believe that the inflations may remain in the range of the RBI's tolerance levels, that is the 4% plus or minus 2%. So the range of a 2 to 6% can remain for the continuously for the next 2 3 months. So that will give the comfort to RBI to hold the policy rate unchanged in the upcoming meeting. Another things which we observe is that the RBI is the most bullish for the growth prospect is concerns. When we look at from the global agency side, all are around 6%, but the RBI is expecting the growth could be much more higher than the agencies are expecting. So looking at the growth side and falling inflations, there are higher probability that RBI can continue with the hold in the policy rate for this year, and probably we might see that a cut could be at the end of the calendar year or start of the new calendar year. So this is the historical uh, chart of a policy rate change, and what could be the expected and what are the unexpected events happen. So what we have seen that the last year in the month of uh, June and August, RBI has surprised the market and gone for the rate hike even after the market was expecting cut. So this year also we have seen that the last meeting was a surprise, and we have seen that the a surprise rate cut from 6.75% to 6.5% they maintained. So the again that looking at the history front, August could be the month in which unexpected event might happen. So the traders and markets could price in that events, and we can see that the bond yield is the main things which can direct the policy path going ahead. So one should look at on the short-term yield to get an idea whether RBI will go for the pause or RBI will maintain the policy rate unchanged. Uh, Another factors which we look at is the interest rate differential. Uh, as you can see from the chart that in August, the differentiations between the US and India bond yield were around 466, or to be precise, 467 basis point, and that has came down to 321 basis points. This is because the Federal Reserve has continued raising interest rate, while the since last meeting the RBI has kept the stance and the policy rate unchanged. So that has created the narrowing of the interest rate differentiations. So that is probably the reasons we have seen that the carry trade has been almost uh, gone away, and the forward premiums has been almost wiped out. So yeah, today also what we have seen that the forward there is no forward premiums remain in the shorter term, while the 1 year forward premiums were quoting somewhere around 1.5%. So that is the lowest level probably in last 2 3 years. So there is no incentive for the forwards to hedge. So that's the reason the traders, or you can say the hedgers, are going away from the market. Just there is a no incentive, only 1.5% is the the forward premiums. So rather than the hedging their positions, they prefer to remain open. And apart from that, what we have seen that the volatility has also came down. So these are the two reasons we have seen that the hedges gone away from the hedging positions, and probably they are more on a trading side. So this could be the serious note as well, just because since last October, what we have seen that the rupee has been consolidating in the range of 81 to 83, and any surprise or a sudden event in a global front or any geopolitical uncertainty create huge volatility, and we expect some kind of a volatility may come in coming months. So one should remain on a cautious front, and any level above 83 will push the pair towards the 85 odd levels, while on a near term fund, 81 remains on a stronger side, just because the RBI is really active at that level. Last month also what we have seen that somewhere around 10 billion kind of a forex reserves additions in the May month, and they have bought it from the level of 8150. So the at a lower level RBI will aggressively add the position. So on a one should remain cautious somewhere around 81 8150 will be the level where RBI don't prefer to go beyond rupee go beyond that level, while on a lower side, if the 83 levels get breached, then we can see that the 8450 and 85 kind of a level as well. As we have seen that the Chinese currency also has fallen from the level of 7, and today is quoted somewhere around 7.15. So if the Chinese currency continue its downtrend, we expect that the same the replications can seen in the uh, uh, our currency as well. As discussed, we have seen a huge inflow of somewhere around 5 billion in the May month, and this month has been relatively on a lower side, and the inflows are yet to pick up. But on a positive side, the foreign funds has started buying since last 3 months, and this trend can continue as our equity market is near all-time high level. So that will encourage foreign funds to pour more money, and that will indirectly help the rupee as well. But the gain would be capped just because the RBI, since last 2 week, the RBI has sold the dollar to pay the dividend to the governments, and that could be the reasons any fall in the USD INR can be bought by the RBI or a hedgers. uh, 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 on a global front, as we see that the market probability of Fed rates to remain pause in the June, but there is a serious note that what we can see that the probability of raising interest rate and in the July month has risen from the somewhere around no rate hike to rate hike. As you can see, this blue line in the May month, there is a negative probability, or there are a chances that the pause will continue in the July. But since mid May, what we have seen that the market has started pricing in the rate hike in the July month, and current probability is pegged at 12.5%. So that's indicating that the Fed may pause in the June month, but may hike the rate in the July month. So that this could be the short-term pose, and the pivot is still far from the current level. Back to the technical side, dollar index, what we have seen that since last 2 weeks that it has been consolidating. What we are seeing is that the lower top, lower bottom is still intact, but the thing is that the 100.80 is the support, or you can say the horizontal line, double bottom support. uh, as long as that support has been holding, there are hardly any chance that dollar index can fall, just because the momentum oscillators and indicators both are indicating that the dollar index can move towards the previous swing high, that is the 105.88. We believe that the way the moving averages are about to give the convergence, or you can say the PS, in coming week, 105.80 could be possible in next couple of weeks. So outlook for the dollar index is slightly on a bullish side, as long as the dollar index hold the level of 100.80. Back to the euro side, what we have seen that the euro has been on a consolidations phase, and what we see that the 1.10 to 1.05 is the range which it has created since start of the year can continue. Though we are at the lower end, but the looking at the oscillators and technical sides, there are chances that we can breathe the level of 1.05 in coming 2-3 weeks, just because there is a negative divergence on the oscillator side, and MACD has given a negative crossover on a weekly chart. So the technicals are unfavorable for the dollar, for the euro USD, and favorables for the dollar index. On a pound front, we believe that the consolidations in the uptrend can continue, but the overall bias remains on a bullish side, as there is a flag pattern formation is still in a continue with the flag range of a 1.2680 to 1.20. So the any breakout over 1.27 will open the higher side for 1.337 kind of a level. We believe that after some consolidations, GBP can move towards the level of 1.37. Any dip can be bought with the stop loss of 1.20. Currently, the GBP is quoting at 1.24, 1.25 kind of a level. So one should remain on a bullish side for the GBP is concerned. On a yen front, the trend has been on a upper side, so the yen is weakening against the dollar. As you can see from the chart, the higher top higher bottoms formation is on a weekly chart. The pair is having support of a 10 DEMA at somewhere around 137. and any level above 141 can open the level of 145 and 152. So the bias for the yen against the dollar remains on a weak side, but in terms of the pair, USD JPY pair can move towards the level of 145 kind of a levels in coming months. Back to the domestic pair, what we have seen that the wage formations has been seen since start of the October, and we have seen that the multiple times 83 levels has been holding in the USD INR, while on the downside, as we have discussed, 81, 81.50 is acting as a support line. So this is the perfect market for the scalpers or the swing traders who can sell somewhere around 83, 83.30 kind of a range and cover that position somewhere around 82 to 81.50. So so due to this, what we have seen since last 3 months, the the options writers were active on a strike of 83.50 and 83 call, while on the on a lower side 81 and 81.50 put has been written. So so the options writer has been aggressively creating positions at that level. So one should keep in mind, if the 83 levels on a chart cross, then they will rush for the short covering. Since last 3 months they are getting money for the writing this strike. So one should remain on a cautious side, as this month could be the a month of a directional trend, as we have a multiple economic events, and that event may bring extra volatility and the directional. Uh, Euro INR, as we have seen that the euro against the dollar is on a weaker side, but when we see on a rupee side, 90.70 kind of a level is at a double top kind of a things. But the trend is still on a positive side, as we have seen that the higher top higher bottom formation is still intact, and the pair is holding the support of 21 weeks exponential moving average. On a negative side, what we see that the MACD has given a negative crossover, but the RSI is still on a positive side, as it has been holding the level of 50. So for the shorter term trader, there could be possible that we may see some corrections towards 87 kind of a level. But as long as it holds the level of 86.50, one should not go for the bearish side, as the directions and the overall medium term trend is on a still on a bullish side. And just like the GBP against the dollar, it has been forming the flag patterns, and the bias for the GBP remains bullish against the rupee as well as on the dollar. Any level above 103.70 will open the level of 104.50, and on a positional basis 107 can be on a card. So one should keep an eye of 103.70 as a trigger level, and if it closes above this level, we can see the rally towards 107. So the bias for the GBP remains on a bullish side. On a yen front, as we discussed, the yen is weakening against the dollar, and the same has been replicated in the JPY INR. The small breakdown has been seen, as we can see that the lower top, lower bottom formation is in on a place on a weekly chart. There could be chance that we may see some swing uptrend, but the lower top and lower bottom pattern is still on a weekly chart, is indicating any short covering bounce towards the level of 61 to 62 range can be used as a fresh or short positions. Oscillators are also indicating the continuation of a bearish trend. We believe that 58.70 can broken in coming months, and we can see the level of 57 and 56.50 kind of a level. On an event side, as we have discussed, the next week we have a FOMC meeting, then ECB meeting, and the Bank of Japan meeting. So next week could be the busy week for the forex market trader. Next to next week, there is a China policy in which the China probably may cut the interest rate to boost their economy, just because the recent number of a PPI CPI and PMI all are indicating that the China is in a recovery is in a trouble. So one should keep an eye on a PBOC meeting on a 20th. Just because there is a holiday, before holiday, China may offer some incentive, incentivize the some of the sectors, and that may uh, create some kind of a extra volatility in the market. So next 2 weeks will remain on a slightly on a volatile side. So one should keep an eye on the events and review the positions as and when the events get over. This is the standard disclosures, and thank you all for uh, joining. And in case you have any queries related to the presentations we given you, you can ask the same on a question side. Over to you, Samir bhai.
Yeah, thank you, Dilip bhai. I think very crisp presentation. I think you covered what happened today in the monetary policy and what's lined up in the coming weeks, especially on the global front, on the Fed side and the China side. I think very interesting point. What will happen on the Chinese market as well, because lots been speculated over there for the rate cut and to boost the economy. So interesting time to see. So anybody who wants to trade, basically the currency segment on HDFC Security, the process is very simple. You just have to go to our website, www.hdfcsec.com, and on the product page you can find currency segment, and you can simply register yourself for the currency segment, and you can start trading with us. So the one can easily trade via the ITS mode, the branch channel, or the CDD, the centralized dealing desk model. So there are three ways where somebody can easily opt for trading. One of the interesting segment which HDFC Security has recently introduced is the new platform called HDFC Sky. I think it's a very new proposition which we have come up with, where currency derivative will be also available over there. So for further information, I would request everybody to reach out to the customer care or the nearest branch or their respective RMs, who will guide you further on this particular platform as well, where you can trade currency segment also. So very interesting built up is going on, and I think so that is on the currency side. So there are few questions before we close the webinar. We would like to take that. So first one is from Mr. Cyrus. Yeah, Cyrus sir, we will share the PPT, or maybe it is also available on the YouTube also. Right, Dilip bhai, it is available on YouTube also, no? This presentation.
Yes, yes. We are on a YouTube live, and that presentations and all the things will be available on a YouTube.
Yeah, so even though Mr. Cyrus, I will share the link with you, so you can definitely revisit the presentation. The next question is coming from Mr. Abhijit. Is trading allowed on HDFC Security on Pro Terminal? So, Mr. Deb, currently it is not available on Pro Terminal. It is available on our another ITS platform, which is the Empower. So once you log into our web portal, the first screen which comes is called the Empower, and there currency trading is available. So you can on ITS internet trading system, you can easily by yourself trade on the Empower terminal. Like I said earlier, that current the new platform which we have come up with is HDFC Sky. So you can you can explore that also. That will be a great platform where multiple the chartings and also will be available over there. So I would request you to either reach out to the customer care, or the your RM relationship manager, where you are respectively trading. So they'll guide you further on that front. Uh, Next is Mr. Aditya Agrawal is asking, can you please repeat the USD INR outlook? The option pricing suggests that the market expects rupee weakening with this next week. Dilip bhai, will you take this?
Yeah, sure. So basically, as we can go by the options, and if you look at on the first three monthly open interest on the option side, you will find that somewhere around 8 million kind of a positions has been there on a open interest side, and that is, and if we go by the level 83 call has been returned the most, while on the 82 is the near term support, just because the highest open interest on a put side is that. So the most of the traders are expecting that the 82 to 83 can range can remain in the June expiry. uh, Even technically, if we go by the level, let me uh, directly to that chart so you will understand. uh, as you can see from the chart, since October, what we have seen that this downward sloping trend line has been acting as a strong resistance, while the upward sloping trend line is acting as a strong support. So this is particularly a wedge formations, and due to this, what we have seen at the option side, 83 call writers is there, and 82 put writers are there. So this is indicating the range bound trade for the June month as well. But one should keep an eye on the event side, just because next 2 week remain the event specific and the full of other economic data. So in that period, what we see that the volatility along with the range breakout can happen, just because June is the month historically what we have seen that the volatility spike. So for the time being, 83 is the resistance, 82 and 8150. These are the two major support area. So outlook for the shorter term or a time being is that one should keep an eye on the level side, and either side breakout can lead to the sharp up rally. As you have seen that on a Monday, what we have seen that after reaching a level of you can say the 10-week moving average somewhere around 82.25. What we have seen that the sharp recovery in the USD INR, and since last 2 days what we have seen that the range bound kind of a trade. So whenever there is a sharp up move and then some consolidations, the pair may again start moving higher. So keep an eye on the level rather than getting on a writing side or on a range bound side. We believe that this month we might see some kind of a directional move, but the trade should be on a with the strict stop loss side. With strict stop loss 83.30, one should keep a stop loss on a higher side, in 81.50 on a lower side. So this is the swing trade. Whosoever is specialized in swing trade can initiate this, use this swing for the trading, but with the strict stop loss.
Yeah, I think Mr. Agrawal, I think we have answered your query, and next couple of questions we'll take and we'll close the call. Anjali Sharma wants to know brief demo on HDFC side for currency trading. Anjali, we can, yeah, I think you probably I would request you to reach out onto the customer care, so maybe they can help you out on that front. That will be great. Or maybe your respective RM, they will help you out on that front. So they will definitely share this with you. And next last question is from Mr. Abhijit Dev, option chain based trading on HDFC Sky. Mr. Dev, yes, we intend to provide this particular facility also. I would request you to reach out to the respective team and they will definitely guide you on that. The HDFC Sky portal is a robust portal with all possibilities. We have tried to cover on that front. So we request you to reach out to the customer care or the your RM. They will give you a demo on HDFC Sky also and the process to avail the HDFC Sky platform also. Yeah. So I think that's it from our side. Thank you, Dilip bhai. Great presentation and great insight. We'll again connect with everybody next month in the month of July. We'll have some clarity with respect to the Fed policy and also on the European side what policies have been taken care of. And also the Chinese market. So thank you, Dilip bhai, once again for a great presentation. We'll connect with everyone in the month of July.
Thank you, Zabir bhai. Thank you all for joining.